Good morning, trading world. It is March 28th, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: big data drops this morning could stall or delay the rally. First, there are some big data drops that could stall or delay the rally that had begun late yesterday at 8:30 a.m. We have GDP, jobless claims, monthly GDP. These reports could impact the tape in a significant way. Again, pay attention to Nvidia and where it is in its trading range. The 850 level is extremely important to hold for any rally to sustain in the broader markets. Now, another important announcement that I have, due to a glitch in TOS, I have been talking about a daily cycle low due between 322.24 and 331.24. Now, due to this glitch that I'm having in TOS, it changed the date in my ideal cycle, prompting all the calculations derived from that date to be off. And going through this and looking things over in just some quick basic calculations, those dates should be closer to April 6th and between April 6th and April 15th. I have a busy weekend this week. I would usually just try to go through everything and rehash everything over the weekend, but it's going to be a pretty busy weekend, so it may be a week for me to go through and completely recalculate everything. But the glitch just affected the timing of things, not the levels. It's just the timing. So let's get to the intraday levels and things that I'm looking at today. Starting on the support side, we have our Jack support zone at 53.03. Queen support zone is down at 52.97. King support zone is 52.87 all the way down to 52.79. On the resistance side of things, our Jack resistance zone is 53.23. Queen resistance zone is 53.30, and the King resistance zone is 53.40. All right, now the important battleground area or no man's land to hold is going to be 52.79 all the way down to 52.60. In this no man land, the more time we spend below 52.70, this level right here, the more it speaks to a bearish continuation. The more time we spend above 52.70, the more likely we are to retest highs soon and rally a little more into next week. On the other end, the resistance battleground is between 53.03 and 53.23. In this battleground, the 53.13 area is the line of demarcation. The more time we spend above 53.13, the more likely we are to retrace and possibly retest highs. The more time we spend below 53.13, the more likely it is to revisit the lower parts of the trading range we had this week. Today's reaction areas. Let me write those out. They are as follows. The first is 53.08. And the others are 5300, Please excuse my sloppy writing. The next reaction area is going to be 5296. And then the next level below that is going to be 5292. So those are the reaction areas. Now, yesterday we had somewhat of a strange trend day due to a little bit of volatility being pumped up. Get used to it, because volatility will exaggerate the day types as it increases. The scenarios that I'm looking at for the day, we're looking at the first scenario that we're looking at most probably is going to be our rounded reversal day type. And that's probably going to look like a bunch of, let me change this color. I don't like the color for that one. The way the rounded reversal day type is going to play out, we're so close to unchanged on the day that it's really a toss-up between this rounded reversal day type and range day. But if we do get the rounded reversal day type, we're probably going to be looking at something like this, where we kind of hang on to that previous close a good bit, and then kind of start into that push down. That push down is probably going to take us somewhere down to that 5297, 5296 area. That may be where the reversal happens, between that 5296 and 5292. So we could continue to push down until we get to one of those reaction areas. That 5292 or 5296 is pretty much where we'll find our midday chop going sideways, and we'll get our push back or reversal on the day after the midday chop, pushing us back up on the day, and we could get another strange ending to the day where we really pop at the end of the day. And that's going to be based on how much consolidation happens during the day. So that's our rounded reversal day type. The next probable scenario is pretty much just the range day, and that range day may seem a little bit more likely because we could get that pop up, down, and a lot more consolidation going down to that 5296 or 5292 area, where we'll then consolidate for our midday chop, and maybe a little bit of a splashdown before picking up. I'm going to come back to that because that midday chop today could turn into a midday drop, but this is how I see the range day taking off, and then again we can have that push up. But something I want you to be aware of is that the alternate thesis for the range day is that during this midday drop, where we get to that 11:30, 12 o'clock hour here, we could have an extreme splashdown that could take us all the way down to that 52.79 or to that other battle zone, 52.70 area, before pushing back up into the regular range day type. So that's something to be on the lookout for as volatility starts to get pumped in. I'm not saying that this will happen, but we must be prepared. So those are things that I'm looking at on that range day. And again, it could happen, the same type of flash down could happen midday on the rounded reversal where we get our midday chop. It could happen just the same. Last but not least, the least probable day type is going to be the trend day. And the reason for that, we kind of hugged that previous close pretty tight, so there's not a huge gap going on, so the probabilities for a trend day are pretty low. But it could happen either way. If it's going to be a downtrend day, something has to happen before the open that gives us a push down to where we'll want to try to come back and fill the gap, but find resistance on or before. And let me change that color. Like I say, something has to happen before the open that gives us either a push up or gap down for a downtrend day or a gap up for an uptrend day, which is possible in either direction this morning. But after the open, we're going to try to fill that gap. If it's a downtrend day, we're going to find resistance on or before that previous close, and then that's when we're going to get our big trend down for the day. We're going to find our midday chop, and then at some point we start the second part of the session off with a head fake. Like we're going to push back up, and then we continue the primary trend of the morning. So that's the downtrend day. If you want to see the uptrend day, the opposite, it's probably going to look like this, where we get something to gap us up before the open, and we try to come back and fill that gap, but find support on or before that previous close, and then we get that primary